Hi everyone, welcome back to today's morning report on Friday the 5th of June, Non-farm Payrolls Day, with me, Richard Perry, market analyst at Handtech Markets. Let's move on to cable, and I think this cable chart is really interesting actually, because you've had this strong run higher that came on Tuesday, and then since then you've had a sequence of three consecutive higher lows and higher highs, which is clearly seemingly to be a positive. However, the last two candles have been fairly neutral, and you wouldn't say in any way that the momentum indicators are sort of gaining ground or looking to push higher on this. It's sort of just still fairly sort of moderately positive, and that's purely because we've sort of been up on the days in the last few days, but still I think this is fairly neutral momentum. I'm still thinking this is playing out part of this sort of rebound within this bear phase. I still think we're going to see a lower high coming around, and I find it very interesting yesterday also the fact that you had that key support at 54.45 and you almost got that to the pip yesterday on the high, 54.41 on my Reuters chart. So really interesting sort of rebound that sort of ran out of steam yesterday, and it's sort of continuing today. This is on the hourly chart. Interesting here, let me just highlight this 55-hour moving average. Basis of resistance on the way down became, once you turned up and went through it, you started to become the basis of support. It's now turned flat, and as the price has fallen back below it again. So it certainly seems as though this rally is running out of steam, I think, with these momentum indicators sort of fairly coming back towards a more neutral configuration. You could even argue a bearish divergence there on the MACD lines as well. So more of a neutral configuration on the momentum near term, falling over underneath that 54.45 key resistance, and it certainly looks like, I think, you could well start to see either a consolidation sideways or even a new resumption of further selling pressure. So is it that we've now seen the rally higher in this phase? 54.45 was that peak, sorry, 54.41 was that peak yesterday, coming underneath all that big resistance at 54.45. Let me just zoom out here, show you that resistance. So really interesting moves we've seen over the past few days. Certainly what you'd say is that if you put pressure on that 53 figure mark, which is that key reaction low that we saw on the 4th, if you saw a move below that, I think you'd start to build on the a move to test that support at 52.50, and then subsequently back towards the lows again. So I see this chart as still playing out as this sort of bear market rally that's going to roll over and start to retest lower again. So this is still sort of playing out as I was thinking, and I think further pressure to the downside is likely in due course. Obviously, non-farm payrolls produces a bit of a caveat to this chart. However, I think any sort of positive or even sort of neutral payrolls data, I think today would be a drag on cable. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.